Good afternoon, Your Excellencies, ladies and gentlemen. We've got a great panel today, actually, and you've all been part of very impressive projects that have spearheaded initiatives. We were just talking about T+3, how it's come to T+1, and now look at us, we're at instant payments. So very fast progression, and I think it'd be really good just for you to introduce yourself, introduce some of the numbers. Let's talk transaction volume, let's talk geographies, and we'll go down the line. So, Mehdi, do you want to start first?
Yeah, good afternoon, everyone. So I'm Buna, the CEO of Buna, Mehdi Manas, and Buna, for those who know it already, it's mainly a platform for processing payment across the Arab region, but not only. So our last participant is MasterCard, joining from New York. That is about the number 120 of financial institutions joining Buna to use a wide range of services, among which instant payments, so the topic of today. Transaction volumes are still low for the time being, but with consistent and good growth of about 15% from one month to another. So we are getting in the thousands per day, per month, and increasing further over the upcoming months, hopefully.
Fantastic. Yeah. Over to you.
Me. Good afternoon. Thank you for having us. It's lovely. So my name is Jan Pilbauer, and I work for Etihad Payments. We are the national payments company of the UAE. We are relatively new. We have been in existence for 18 months, and it's a year ago when we launched the instant payments platform for the UAE. It's called ANI, which means instant in Arabic, I was told. As Mehdi mentioned, I think with every payments platform, having the network and the reach is the most important thing. So we don't have 180 financial institutions, but within a year we onboarded more than 60 financial institutions in the UAE. We have over 1.25 million people registered. And as of today, I think we are doing over 400,000 transactions a day. So I see a beautiful growth of the platform. And it has been kind of in a stealth mode for the last year, but I think at the end of this week, there will be a massive marketing campaign, and hopefully everybody will start seeing ANI, out there, and their financial institution is likely ready to enable those payments. So we will see hopefully even more growth in the coming months.
So you heard it here first. By the end of the week, ANI will be everywhere. Ritesh, let's go to you.
Hello, everyone. I represent National Payment Corporation of India. We run and operate Unified Payment Interface, or UPI. It's about 8-year-old platform, 7 to 8 years old. We are today processing about 15 to 16 billion transactions a month, so about 500 million a day. And as per some reports, that's about 50% of the instant payments that are processed globally. Just to highlight the value that it's creating, out of these 15 to 16 billion transactions a month, 60% are merchant payments. So that shows how instant payments have kind of percolated to every nook and corner of the country. And that's very important for a country like us, 1.4 billion plus people. So it's instant payment, if you see in India, is formalizing economy from informal sector to formalizing, because when more and more small businesses accept payments, there's better tax compliance, there is better access to credit and microfinance. So UPI is doing that in India. On the user side, we have about 400 million users who are using UPI. Every time I say this, Jan,
I get upset with my numbers, but anyway.
You say that so coolly. 400 million.
Yeah. So if you can simply say UPI has truly democratized payments in India, and the value that it is creating is immense. And I think we are today looking at being the third largest economy in the world, and UPI and the larger digital public infra, DPI, or as it's called, India Stack, has a big role to play in this. So thank you.
And Tia, a bit of a different question on your side, Electronic Money Association. January is a big month for Europe when it comes to instant payments with the regulation adoption. What sort of numbers there do you think we'll be seeing?
Right, so maybe a little bit of context. So we have local schemes. Some of them might be instant in different EU member states. And then we have SEPA Inst, which is the instant payments. And that's been growing steadily since November 2017, and now stands at around 20% of all SEPA payments. So we've got three things. We've got local schemes that people use, then we've got cross-border schemes within the EU, and then out of those, 20% are instant. What the legislation does in January is it says to all the banks and all the payment service providers that do payments in euro, you have to also offer SEPA Inst, an instant version of the SEPA credit transfer, which currently has to be settled by the next day. You have to offer it to all of your customers, and you have to offer it for the same price. So that's, if you like, the big bang, and it'll be interesting to see what happens.
And we're going to come on to things like pricing and banks later on, but good to know for January what we're up against. Yep. Ritesh, I just want to come back to you because those numbers, they need to be discussed a bit more, I think. When UPI was launched, it was designed for an ease of use and interoperability, as you said, and now it's expanding the technology worldwide. Is this a new adoption of payment rails, do you think?
So when you look at UPI in India, I think we've become a dominant payment form, and it's truly displacing cash. You know, a lot of people say other things, but I think it's all about displacing cash. Because if you look at credit cards, I think they're also growing, but they're growing at a slower pace than UPI. Now, given it has become a habit for most Indians in terms of making the payment. So for merchant payments, it's QR-based, static, and dynamic. For personal payments, it's phone number or alias, and it's dominant. Now, given the position it enjoys in the market, it's natural for us to kind of take it outside India. So today we are live in 7 markets, and we are looking at creating wider footprint for UPI. And this is to serve the growing aspirations of Indians today. This year, I think about 30 to 35 million people will travel outside India. As per a report by McKinsey, about 90 million will travel every year in 2040. So the number is going to increase radically. Now, to serve the needs of these people, you know, it's important that we create a global footprint. And here, we are working on both merchant payments as well as P2P. In P2P, we are already live with Singapore, and we are going live with another country in a week or a couple of weeks. We're also discussing with Jan how we can bring ANI and UPI together and create a lot of value for ecosystem in India as well as in UAE. We're also talking to European Central Bank for connecting tips with UPI. So there are various discussions that are happening today for P2P movement, and we get about $125 billion in terms of remittances every year, and we send about $25 to $35 billion every year outside India. So we are trying to bring some efficiency in that space, and it's also a stated agenda for G20, World Bank, and Central Bank, Reserve Bank in India, Reserve Bank of India. So that's one area. The other is merchant payments. That's where you know, we are looking at partnering with players in the market that are of relevance to us, QR-based, and we are in some markets where there is QR already deployed. We are making changes to read the existing QRs so that our users, without any friction, can read the QR and pay. And in some markets, we are also working with the local acquirers to deploy our QR so that people get that kind of experience. So that's what we are pursuing. And every market is unique. But having said that, you know, we are a technology-driven organization, and we are happy to do most of heavy lifting to be able to reach early go-to-market and create convenience for our users.
Really nice summary there, definitely. Mehdi, I just want to touch on Buna. Now, you've expanded your reaches quite significantly from the beginning. But on instant payments, have you seen any misconceptions, or has it been embraced?
Yeah, indeed. So Buna have one specificity, maybe compared to my colleagues, is that we are only exclusively in the cross-border space. So we don't process any national flows, but we deal only with payment across different countries or different regions, which position us well to compare different practices and different situations. When it comes to instant payment, yes, there are certain misconceptions. The main one and the most difficult one is on the definition of instant payment itself. So what instant payment means. And in certain cases, the understanding that we should try to process payment as fast as possible. As fast as possible is not enough to be instant. So it's instant payment is about making the funds available to the final beneficiary and to make them immediately able to be used by the final beneficiary. To say it differently, it's as efficient as cash. We need to make it as efficient as cash, so there is no time gap between the time at which you are supposed to get the money and the time at which you effectively get the money. So that time gap today is a source of a lot of risks. So the gap between these two timings, it means risk for the beneficiary and also for the ordering party. And that is a source of a huge amount of frictions, additional costs that are totally removed by the instant payment. So these misconceptions make the whole value of instant payment vanishing if it is not fixed properly. It is even more difficult to achieve in the cross-border space because the challenges of making it instant are much more difficult, of course, than in the domestic space, and this is where Buna has a role to play across all these different jurisdictions.
It's a nice segue, actually, to come to Tia, because the fraud angle of instant payments is something that especially the UK and Europe are doubling down on in some of their regulatory next steps. Can you explain a little bit about the different approaches that are currently utilized and what's working?
Okay, so maybe we start off with why instant payments are a good idea. So it means that if you're a merchant, you've got liquidity straight away. If you're a consumer, you want to make a payment to maybe a service provider in your home, a plumber or a carpenter, you can do it straight away. If you want to send money to your son or daughter, you can do it right away. So lots of good things about instant payments. But then it also becomes an attractive target for fraudsters. So, for example, if I can convince you to send money to me under some kind of false pretenses, then it happens instantly, and then I can take it out instantly, or I can transfer it to multiple accounts instantly. So what we found is, with the adoption of instant payments, the rate of fraud has gone up as well. And in particular, a kind of fraud that we call authorized push payments. In other words, the person who's making the payment authorizes it. It's not somebody who breaks into your account and takes away the money. It's things like CEO fraud, if you're familiar with that, or romance scams. 2 days ago, we had a new recruit to our company, and yesterday he sent me an email and said, I've just bought you the Amazon gift cards that you asked me to buy. And I said, what? And so he had an email pretending to be from me. Second day he joined the company, asking him to buy Amazon gift cards and to send them to an email address. And he thought they were genuine. So anyway, an example. So that kind of fraud has risen quite steeply. And as a result of that, the regulators are asking the payment service providers to underwrite that fraud, essentially, to reimburse customers for the cost of that fraud. This has three problems. It motivates the consumer to be less careful. It motivates the criminal to find targets that are easy pickings, because as soon as they succumb to the fraud, they get their money back, and then they become a target again. And it motivates the payment service provider to slow down the transaction, to make friction around it, because they have to check, they want to be double sure that it's a genuine transaction. So these are the kinds of problems.
I did hear that LinkedIn updates are something that people look for so that they control.
My thoughts exactly. I think that's exactly what happened. Thank you.
Well, I think this actually comes down to infrastructure then, and Jan, this is, I guess, where you come in. I know Al Etihad Payments, the UAE, are taking big steps in kind of how to build this from the ground upwards. So why does Annie and other solutions feel different to the rest?
Yeah, I've had the pleasure to actually work on 2 other national instant payment solutions in the past. So I think now I have a third opportunity to get it right. So we'll see how it goes. But now you gave me an idea. You called it Yanni, which is kind of, you know, Jan and Yanni. I never had a payment system called after my name, so maybe that's something I have to talk to the marketing department. But joking aside, I think the technology has evolved so much that when it comes from the infrastructure side, it's very easy to build a platform which has massive throughput, you know, can cover multiple participants. You can use APIs to connect to it. So it's not something, I think technology is not something which makes instant payments platforms unique anymore. So what we have focused on with Ani was more the business aspects, kind of thinking about the customer and specific national requirements which are necessary for a market like UAE. So there are basically three things I think which make Ani quite unique and something we are proud of. One is something we call inclusivity. So many of the national payments platform and instant payments platform, they still deal mainly with the traditional incumbents banks. Ani, of course, is a platform which can be used by banks, but it can be also used by any other licensed financial institution. So in the UAE, the regulators started issuing, you know, other licenses which allow institutions to hold funds. And basically, Ani doesn't discriminate. So if you have a traditional bank account, you can connect it as a source of funds to Ani. If you have a wallet with one of the, you know, non-traditional players, you can connect it to Ani. And what's probably most revolutionary, many people in the UAE, they actually use something called salary card. That's how the salaries are distributed. So even if you have just a salary card, you can still use it as a source of funds and make transactions on Ani. So that's kind of covering the payer side or the issuer side. The second area where I think we were quite adventurous, and we believe that that's necessary to increase adoption, is the acceptance side. So many instant payments platforms, they start as a person-to-person remittance kind of platform, which limits the growth a little bit. We were not scared in the UAE to actually launch Ani with QR codes into the point of sale. So we work with all major acquirers. So on the traditional terminals, you know, at ADNOC and everywhere else, you can now pay with Ani. But also for some of the smaller players, they can just print a QR code and put a sticker on their small shop and start accepting digital payments for very low cost. So kind of making sure that wherever you go, Ani is there for you to make a payment. That was the second, I think, revolutionary and quite important area for us. And the third one is, and you talked about it, is the fraud, right? So you mentioned that having a payment process as soon as possible is not good enough. It needs to be instant, which gives very little time for the financial institutions to make a decision if something is a genuine or a potentially fraudulent payment. And because of the authorized credit push payments, for the infrastructure and for the players, it actually looks like a genuine payment. So that's where you need to become quite creative, and that's another thing we are working with our friends from NPCI, having platforms which can be, you know, based on machine learning, AI, and help the financial institutions to make a decision if a payment in real time should go through or should be stopped. So those are, I think, some of the three biggest things which make Ani unique from my point of view.
There's a bit of a dance that needs to be done here to get this kind of payment harmony and balance, shall we say, with the FIs, the merchants, and then the consumers as well. I would love to hear from all of you, and we can come down the line, as to what you think needs to be done to make this dance work and everyone be in harmony together. Mehdi.
Yeah, happy to start with this one, because there are two dimensions, I think, to the questions. You refer to the harmony across the value chain or different actors in the payment chain. There is another dimension that is more relevant for Bunia, which is the harmony across border, meaning across different jurisdictions. It might be more difficult to achieve once again. Going back to the point made by Jan earlier, it is not a question of technology anymore. Technology can achieve a lot and rather easily nowadays. From time to time, I have the debate with my team to what extent we should make public our design document of the system. So some of them argue that we should not, because otherwise it would be copied. No, I'm very happy. I'm very open to that. We can share all our technical documents. There is no risk that will be copied because of that. What we are bringing is our ability to put around the same table different type of actors from different jurisdictions, commercial banks, central banks, other type of regulators, fintechs, other type of provider, and to try to build consensus across this diverse community. This is the real value added that we bring, and that cannot be copied overnight. So we are rather relaxed with this challenge. Your question on instant payment, I think it helps a lot. It helps a lot in the direction of achieving this harmony, because it's maybe one of the unique occasions where we see the adoption of the same or almost the same payment instrument at global level, and that in parallel to the adoption of a new standard for messaging, which is the ISO 20022, also at global level. So we see a trend of more regions and more jurisdictions aligning on standard, and that over time will help a lot in maybe not achieving, but getting closer to a harmony at least.
Bringing it all together. Yeah.
Yeah, you know, I'm a payments geek. I love payments, but I think we need to recognize that nobody wants to think about payments, right? We are making payment because we want to make a commercial transaction. So I think harmony will be achieved only when the payments are completely ubiquitous and invisible. I think we have a long way to go as instant payments platforms. When you think about it globally, harmonized payment solutions are only the international card schemes. And they have a bit of a head start. They have been around for a few decades. I think we are getting better when it comes to instant payments on the national level. So we are seeing more harmony, the inclusiveness I was talking about, that it doesn't matter which financial institution you are a customer of, you have access to the same payment solution. I think on the international level, that's still a relatively long way away. Hopefully not decades, we will be able to catch up, but the harmony is still not there when it comes to the instant payments. And there will be all these components Mehdi was talking about, which need to harmonize to achieve it.
So I think it's important to notice or probably start from where it all started. As an organization, we are committed to digital public good, and what it means is that we are driven by cash displacement, we are driven by financial inclusion, and with this purpose in mind, you're looking at adding more users on one axis, and you're looking at adding more use cases on the other axis. Now, how do you create these experiences which are simple, which are adaptable, and which also inspire confidence in safety and security? So to deliver this on X and Y axis, we collaborate intensely. And we collaborate with the banks, with the fintechs. We have a very progressive regulator, our Reserve Bank of India, so we get a lot of guidance from them. And we are also enabling national agenda, so there's a lot of sponsorship from the government of the country as well. And all these components, beautifully come together to kind of deliver what we deliver in India. Now, having said that, when you look at, partnerships outside the boundaries of the country, we are looking at bilateral as well as multilateral models. So we are partnering with Nexus, Project Nexus, which is five central banks are part of it. We are also exploring possibilities with Buna, and we are directly working with some countries like UAE, which are of strategic importance to India. So India-UAE relationships are of supreme importance. So we are also exploring bilateral connections. So we are, pursuing different strategies. Like I said, we are a very, very tech-heavy organization. We call ourselves as a technology company, and we do payments incidentally. So we are, I think, we are, we are flexible, we are agile, we are, open to exploring different possibilities. And in a short span of time, I think 4 years, if you can say we are live in 7 markets, we'll be live in many more in few years to come. So I think it's a good experience. Like Jan said, things are not standardized. But having said that, if everything is built domestically in an organic manner, there will be some level of data massaging that will be required when you connect different ecosystems. But I think we have developed enough and more art and science to kind of figure that out.
I'd love to know, have you had problems with fraud? Has fraud been a specific problem when you've gone to kind of, because of the instant nature of payments, or is it just a background issue similar to other problems?
So I think it'll be unfair to assume where there is money, there is fraud. Fraud occurs in cards, fraud occurs in cash, because that's the nature of the beast. But for us, our fraud to sales ratios are way better than cards.
Okay.
A couple of things. I think there is a very, very strong safety protocol that is instituted when you participate in UPI. So you can only participate from the registered mobile number with the bank. And every time you change your SIM card or your phone, you have to redo the whole process. And secondly, every time you transact, you have to put the PIN. So it's second factor, even if it's face-to-face, it's second factor authenticated. So we have created some of these processes which are pretty robust in nature. And you mentioned about some, I would use the word soft frauds, where people are gullible or greedy. So we invest in a lot of awareness and education that you don't have to do this, you don't have to do that.
Yeah.
So we do a lot of these above-the-line initiatives, hiring celebrities and conveying to them, to the consumers at large, that these are things you shouldn't be doing and these are things you should be doing. So a lot of work goes on in those areas.
I hope you don't mind me asking. I'm very interested. But to answer your question very briefly, I think the infrastructure side of things and the consumer focus side of things, PSPs are good at, whether they're traditional or fintechs. The difficulty that we're having right now is on the fraud side, and it's particularly because the fraud is not in the payments domain. It's in the social domain. And that the challenge is somehow to solve the problem in the social domain to reduce the impact in the payments. The payments is almost like the fulfillment part of a much bigger crime. And that's a challenge.
We could do a whole new conversation on that next year.
Let's do it.
Thank you so much, gentlemen. Thank you, everyone.
Thank you.